Hi everybody, this is Tim Bost with FinancialCyclesWeekly.com, and we've been watching the financial news and the headlines, of course, on December 18th at the end of the trading day, where the stocks were surging as the Fed decided to go ahead and start its tapering program, cutting back on its purchases of bonds and mortgage-backed securities. This brought record high closes for the Dow Jones Industrial Average and for the S&P 500. The big news was that the markets had gone into a dramatic rally in response to this move from the Federal Reserve Board. Of course, the actions focused on Shalom Bernanke, the chairman of the Federal Reserve, and his decision that the Fed would begin tapering its program of buying up $85 billion a month of these securities. Now, the Fed has been doing this for quite some time now, essentially creating $85 billion a month out of thin air, and the decision was to cut that back by about $10 billion a month, so it'll only be $75 billion beginning in January. Now, in the past, even just the tiniest suggestion that the Fed might consider tapering back on its buying program of these securities has been enough to send the prices of stocks going into the tank, sharply lower prices in response to the notion that the Fed might stop its money-generating program that it's been so consistent with. But on December 18th, after the Fed announcement and after Dr. Bernanke had a press conference right after that, the Dow closed for the day up 1.84%. The S&P was up 1.66%. In other words, there was a big rally in the stock prices. The question was, why did this go on? And if we take a look at the astrology behind the scenes, we can get a much, much better idea of what was really going on with this Fed announcement and the very strange reaction that we saw in the markets. As the Fed began its meeting of the Open Market Committee the day before this announcement was made, on Tuesday the 17th, there was a Uranus direct station that combined its energies with the full moon. Now, Uranus is the planet associated with big surprises, and the full moon energy made it even more surprising, at least in its potential for the market reaction when the Fed announcement came out on Wednesday the 18th. Now, this is what happened during that trading day. This is a chart of 1-minute price bars for the S&P throughout the day on the 18th of December. And as you'll notice here, during the first hour and a half or so of trading, the prices were fairly flat, but by shortly before noon, they had declined, with the S&P falling below the closing price for the previous day. And as then we moved into the period following 1 p.m., the anticipation of the possibility that the Fed would in fact taper the buying program began to send prices lower. There was some suspicion here that Bernanke might make a move, and what we saw happen then was very, very interesting. In fact, right about the time the announcement came out, there was a big plunge in stock prices. This has been overlooked by the media. The instant reaction to the news was what we would logically expect to be the case. And this is what the big money was in fact betting on that day. Now, a very interesting thing happened here right before the announcement. The announcement came out exactly at 2 p.m. Eastern Time. It was set to do that. The Fed programs this very, very precisely whenever it's making announcements about its policies. And after its two-day meeting then on Tuesday and Wednesday, the announcement came out at exactly 2 p.m. But the market action started up about a minute before that. About 50 seconds before that, there was suddenly a surge in trading activity. And the spiders, that track the S&P, traded $106 million worth in 1 second of trading. And during that same second of trading, there were approximately 3,700 contracts of the S&P mini futures traded. So somebody got the word before the Fed announcement actually came out. And this was enough to begin to stimulate the market activity. As soon as the Fed made its announcement, then the market plunged very, very sharply. But something happened a few minutes later than that. About 3 or 4 minutes after 2, suddenly the market reversed course and began to head back up. And then as the minutes ticked by, that surge went up even more strongly in response. Now, this is when things got very, very interesting with the market reaction to this Fed announcement. As we moved farther ahead with the session, we saw even higher prices. And this is what was going on astrologically. When we look at the dynamics of the astrology on a minute-by-minute basis, even a second-by-second basis, we can consider the transiting ascendant and mid-heaven in New York, where we time our market charts, and we note that right at 1 minute prior to 2 o'clock, at 13:58:57, a minute and 3 seconds before the Fed announcement, there was a precise parallel between transiting Venus and the mid-heaven of the day at that moment. This is what triggered that early market activity prior to the actual time of the Fed announcement. And then, at about 2 minutes after 2, we had the ascendant forming a quincunx to Zeus. The midheaven was trine Admetos at 2:04:05, 4 minutes after 2 p.m. The midheaven alignment with Admetos, and then the 1 minute later, we had the ascendant semi-square Hades and Jupiter sextile the ascendant, both at 14:05. This was what was going on astrologically to turn the market direction so suddenly that day. And as you can see, there were many other astrological events that occurred later in that trading day. And as we can see, the prices continued to go up for the rest of the trading day, but it happened in kind of a stair-step fashion. This was very, very interesting because what happened here at about 12 minutes after 2 p.m. With Pluto forming a parallel to the midheaven, the short sellers began to cover their positions. What was happening here was speculators had taken short positions believing that the market was going to come down, and then at this particular point, at about 12 minutes after 2, suddenly there was a surge in market activity as the prices went up. When you take a short position, you're betting that the prices are going to go down, and you can lose an infinite amount of money if prices continue to go up. So what had happened was the speculators on the short side of the market had put in their stops at 1792. This was the price level which was the high on Monday, the previous high for the S&P for that week, and this was a critical area, and it triggered a bunch of market action. Of course, as soon as the short sellers were knocked out, then immediately players came back in and drove the price back down. It returned to that level, cleaned out some more shorts at that price level at 1792 as we moved into the time then that Dr. Bernanke began his press conference at 2:30. Then we go up here to 2:42 p.m. With Ben Bernanke still in the midst of his press conference, we had Pluto forming a contraparallel to the ascendant at that moment, and that was when the S&P hit the price level of 1800 exactly. Now, 1800 is a very significant psychological barrier. This was where a lot of buy stops were set on the short side. And once again, we saw a very similar chart pattern here with the short sellers getting knocked out of their positions as they did panic buying to cover their short positions. And then a little later in the day, as we moved on past the press conference and got toward the closing hour of the trading day at 3:20 that afternoon, we had Pluto in a quincunx 150-degree angle to the transiting ascendant, and it was at that point that the stops or buy stops set at 1805 got knocked out, another key resistance level. And again, we see this same pattern repeating in the market as these short sellers were knocked out of their positions and were forced to buy to cover their shorts. And then finally, toward the end of the trading day at 3:42 p.m., just 18 minutes before the closing bell, the ascendant was in a trine, 120-degree angle to transiting Zeus as the S&P hit the 1810 level. Again, a logical place for the short sellers to be putting in buy stops. If the market goes above that level, they want to be out of those short positions because of the increasing risk exposure. So this was what really was going on as these astrological configurations occurred and as the short sellers were being knocked out of their positions. Now, this was not, as the media suggested, the market responding to the Fed's actions with gleeful enthusiasm and a big celebration going on that created this wild rally, driving both the Dow and the S&P to new record high prices. They did, in fact, hit those higher prices, but this was actually panic-driven big money speculators who were covering their short positions to protect themselves on that side of the market. Now, these same speculators still believe that the stock market is headed down, and at this point they're just watching and waiting for the next available opportunity to sell the market short. So we cannot believe everything we see in the markets. In the markets, things aren't always what they seem to be. And that's why market astrology is such an important tool. We use it to help us figure out what's really going on behind the scenes. And it does give us a tradable edge in the markets. This is Tim Bost with FinancialCyclesWeekly.com. Thanks so much for taking time to watch today.